I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. If you enjoy this interview, make sure you subscribe to our channel and leave us a comment. John, great to have you here.
No problem, Charlotte. Good to see you again.
Nice to be speaking with you, and we're catching up, I think, after about 2 months. And in that time, we've seen gold have its ups and downs, but I think generally we're fairly flat from where we were when we were speaking at that time. So starting with gold, as we begin most of our conversations, what do you see coming in these summer months? Typically, summer can be a quiet time. Are we in for a period of consolidation here for gold?
Well, at 2,300, as we're recording this, I mean, it wouldn't surprise me to see more consolidation. However, I think what you had said where, our last interview 2 months ago was around the same price is important to note for investors. That could be deemed two different ways. One is negative, that it hasn't done anything. That's logical. B, however, it's really going to mean something to producing gold companies, meaning that, GDX being the largest ETF out there with 15 billion in assets, the top three holdings there are Newmont, Agnico, and Barrick, right? NEM, AEM, and Gold, GOLD. So when you look at about a third of the ETF being in these three names, with earnings coming up in July, what's different this time around for these three companies and other gold producers is that they've been able to clip a really nice margin on what their costs are versus what the current price of gold is, right? So if their all-in sustaining costs on average is, say, $1,400 an ounce, and gold's at $2,300 an ounce for weeks and weeks on end here, they're going to be able to post a really good quarter. And I think the broad market is really missing this because of all the noise, right? I mean, tech continues to do well. S&P hit an all-time high since we last talked. I mean, there's a lot of distractions out there, which I get. But I think value managers are going to start to see these stocks in the large cap gold space start to do much better, and it'll catch their attention eventually here later as the year progresses.
Yeah, that's exactly what I was going to ask you when you started talking about the gold reports coming out soon for the second quarter. Is this the time when we'll start to see that mainstream interest finally in the gold equities come back?
I think it'll take a little bit more time. I mean, July will be a nice reminder to large cap value managers and mid cap value managers that these stocks are worth their time. However, will it be like an all-in kind of event? No. What we're going to need to see in our view is the broad market to start to pull back, and that will create what we call a sector rotation into some safer havens like a Newmont or an Agnico, right? Like that's what managers are waiting for, because remember, Charlotte, most portfolio managers have to be benched against a particular index, right? So if you're a large cap value manager in the US, you're benched against the Russell, value index. If you're benching against the S&P as a large cap core manager, right? You have all these different metrics you've got to meet to get a bonus, whether you're a US or Canadian PM. And that's why there's so much chasing going on within the tech sector, is that you can't be underweight tech right now and expect to outperform. It's just impossible. So it's feeding on itself in a negative way, in my opinion, because you're starting to see large cap value managers justify more of a core position. You're starting to see large cap core managers justify more of a growth position. And the end result of this is that more and more people are looking at growthier things instead of sticking true to their objectives.
All right. And speaking about the broad market, I think in our last conversation, you had mentioned if in September we don't see an interest rate cut from the Fed, we could see some trouble there. So I want to get your take on that. What do you see coming at this point from the Fed in September, and going beyond that, the impact on the broad market?
Sure. So to update everyone, June, I guess 12th was the last Fed meeting, and that happened in between our last interview. The Fed was pretty clear that they're looking at one cut for all of this year. And that was new from them to put actually in writing and to say multiple times. That was the headline on CNBC and Bloomberg, a minute after the release, right? So like now it's on the table before it was talked about. But remember, January 1st, we were talking 4 to 5 cuts. Now we're talking 1 cut. So in 6 months' time, that's how drastically this has changed. So that's why I said on our last recording, and I'll reiterate, September 18th meeting is very important. And it's less important now from a will they cut perspective, because I think there's a 64% probability they will cut 25 bips on September 18th. As we get more economic data here in June and July, we'll be able to get a better sense of whether or not that's going to increase in reliability. But even so, a quarter point is not going to save anyone in the real estate market that's feeling crunched by higher interest rates. It's simply 1 cut, right? And it's disappointing. So I think that could be the catalyst for a sell-off, is Powell's comments following potentially a 25 basis point cut in September, right? If he's going to indicate that we're not going to cut at the other meetings later this year, the market's going to hate that. And I think there's a lot of people banking on the Fed having their back, because let's face it, the Fed has had people's back since the 08-09 correction, and they've continued to do whatever is necessary to keep the economy chugging ahead. This time, I think it's different because they really painted themselves into a corner. And let's face it too. I mean, we have a U.S. election coming up. Trump has been very vocal that if he gets in, then Powell's out, and so that's going to cause some friction as well, right? So we'll know more about that in November.
Definitely many factors at play there, and of course, we'll be checking in with you when we get closer to that time. But for now, help me unravel what happens to gold in that scenario, because of course we've been waiting for an interest rate cut, and I've been told many times, of course, that will help the gold price, but gold has already been moving. So what do you think happens to gold?
In that scenario, you could see a knee-jerk reaction down on all assets in September, because September and October historically have been the worst market months going back to 1929, right? So I wouldn't be surprised to see a knee-jerk reaction down in miners and metals. However, I would see a quick move back up, which would take people by surprise, I think, that aren't in our sector, because it will be seen as a safer haven, and that sector rotation I've been alluding to will be in full force, right? Where people are starting to see, okay, I can't be 30 to 40% tech anymore in this kind of environment. I've got to find other avenues to make money for my clients.
Okay, I think that makes a lot of sense, the way you've outlined how that could play out. I want to also check in on other factors driving gold. I believe we've talked probably many times in the past about the impact of central bank buying on gold. And recently, I believe the World Gold Council had a report saying central banks are still interested in buying gold. That continues to be a factor. However, we did hear also that China didn't add to its reserves in May. So I wanted to check in with you on central banks and what we can expect there.
Yeah, great question. Central bank buying has been leading the charge for gold here for the last couple of years. China has been the most prominent country out there in the news. And that's why when we saw June 7th that they weren't going to extend things for a 19th straight month, that the market didn't like that being the gold and silver market. But I don't really worry about that kind of thing, because non-farm payrolls was also June 7th, which came in 90,000 jobs hot. And that generally means bad things for gold, silver, and miners when you get a hot headline number like that. So I think it was a combination that day of the news. It wasn't necessarily all China. But when you actually look under the hood to see what's happening on both of those issues, China is going to continue to be a consumer of gold. And secondly, non-farm payrolls, when you look at long-term jobs, May over May, long-term jobs, full-time jobs, it is actually flat year over year. So you're not seeing this kind of job growth that Biden is pushing out there to the public, because look, it's an election year. You're going to talk up anything good when it comes to job growth, right? And the headline do look good. It's just you have to look deeper than that to see that we're not creating a lot of new full-time jobs. And I would argue that we're going to see a much more difficult time period for whoever gets in office in 2025 to kind of manage through this.
So the election has come up a couple of times already in this conversation. And I wonder, when you look at that, are there ways that you would trade the election or try to do that? Or is that something that you treat as something that you wouldn't trade around?
Yeah, great question too. I mean, look, people say, well, Donald Trump wasn't very supportive of mining during his time in office. I would say that he's a pretty, what's the word? I'm going to probably say the wrong thing here, so I'm going to be careful about what I say. Let's just say that he will adapt, right? Like he will look at, you look at Kristi Noem, who's one of his possible VPs. She is in charge of South Dakota, right? A very mining-friendly state. I think that he will come on board to the narrative of creating U.S. jobs, right? Like, not that Biden doesn't want to do that, but I think Biden is much more conservative when it comes to supporting mining in the states. I think Trump would be much more open-minded to expanding, things and increasing permitting times, et cetera, which I know is kind of like not mainstream view. But look, when you look at China and how far ahead they are in the commodities race, I was saying on Kitco's program, just June 17th here very recently with Jeremy, that China is so far ahead in production in some of these metals that we have to do something. And as I talk to CEOs in the junior space, which we can get to here in a minute, I would put them into the special situations or critical minerals bucket. They are talking more and more to DOD and DOE execs than they ever have before this year. So I think that's very bullish. It's not showing up in prices yet in some of these stocks, that's for sure. And I know it's been a long, painful couple of years for investors, but just know that, I am encouraged by the kind of conversations I'm hearing from CEOs in terms of just the last 2 to 3 months in terms of who they're talking to in the U.S. government.
Okay, we'll definitely come back to those special situation stocks toward the end. But before we go there, I want to ask you about gold equities in your portfolio. So I believe when we spoke last, you had about 40% of your portfolio in gold stocks. You can correct me if I've got that mistaken. But I wanted to check in and see if you have updates on any of those that you would want to talk about.
Sure. I think we mentioned First Nordic Metals, which was FNMCF, and that has done quite well. They basically are going to continue down that path of building out their project in Sweden. Just seeing it from an analyst perspective, I don't know that Finland's assets are going to be core assets for them because their Swedish projects are doing quite well. And not that Finland's too far from Sweden, but I think they may want to consolidate, their efforts in Sweden. They already have a joint venture with Agnico there, which is really positive. So the stock's just done really well since we last mentioned it at around 16, 17 cents. It's now at 24.5. It hit 30 US briefly last week. So, I mean, there's definitely an upside in a stock like that. Taj Singh ran Discovery Silver, and he was responsible for making a lot of money for investors in that stock in Mexico. So, this is a different story completely. However, we, as you know, tend to look at management as our first screen, and we like people that are successful in mining as opposed to people that may be just starting up as a newbie in the space because they don't have a track record, right? I mean, when people look at my track record and performance, if you go to our performance tab on FenneckConsulting.com, if I wasn't performing, people wouldn't want to follow me, right? I mean, it's just natural, I think. So that's one name that we talked about. Another name that we're starting to get more excited about would be NevGold right now. NAU in Canada, NAUFF in the States. They came out with a great press release here June 20th that I think the market just didn't really read correctly. I mean, sometimes you just get people that are trying to sell into strength, Charlotte, as you know. They've held the stock for a while, and they use that news item as a liquidity event, which I've never really understood unless you really are up against it and need the cash. I mean, if you've waited this long for the last, from 2020 to now, this is not the time to be selling certain stocks. This is the time to be accumulating on weakness because we are in a confirmed bull market, I think, for gold, and silver is getting there. So NevGold explores for copper and gold. They put out great copper news on June 20th because their project Zeus is literally 20 kilometers away from the Hercules project. Hercules, I would argue, was probably one of the top 3 mining stocks in the news last year for this project. So they are in Idaho. I think it's ranked the 8th best jurisdiction globally. And they have all this gold as well. So, I mean, I like stocks that you can win multiple ways in, right? And, the share structure is intact. Brandon used to work for a big cap gold stock. So he has been on the other side of the desk, meaning that he has worked with companies like his size in trying to determine whether or not they have merit. So he's positioning himself, I think, quite nicely with some of the majors he's talking to, and we'll see what happens. I mean, you can never know for sure, but I wouldn't be surprised to see some, one of the ways that you can not dilute shareholders is to do a joint venture, right? And sometimes it's fortuitous for clients, sometimes not. But I am a proponent of not destroying the share structure, right? And so, like, if we can find a way to invest in a stock where they can take a 9.9, give a 9.9 or 19.9% percentage to a major, it's kind of comforting, right? Because you won't have a Marathon Gold situation on your hands where they don't own 30% of the shares outstanding. And then Caliper came in last November and took them out for a song, right? In the 42 or 43 cent range. I think it was trading out the day before. So it's like, we're in this for a longer period of time than most investors, but we're also in it to make money. And if we're not making money, why do it? I mean, it's just not. It's a portfolio diversifier goal in silver, yes, but you have to make money at the end of the day, or clients are going to fire you. So, I think the CEOs I just mentioned, Taj and Brandon, both understand this, and that's important. Is that they're not just sitting around, coming up with a game plan down the road. They already have a game plan in place.
Okay, really good to get those gold updates. And now I think let's head over into silver. So I think you briefly mentioned silver is nearly in a bull market. And I wanted to check in on what's going on with the price, because since our last conversation, we have seen silver get past that $30 level, although we're not above that right at this moment. So maybe we could talk about upside and downside levels for silver right now, because you're usually pretty good at pinpointing those for us.
Yeah, thanks. I've been investing in silver coins since, 24 years now. So, I mean, I follow the price of silver like, gosh, that's a quarter of a century. That's really making me feel old right now. But honestly, like, silver is just the most frustrating commodity out there, right? So, like, it's going to buck most people, and it probably did it again to a lot of people here, thinking we had a confirmed breakout. I would argue that getting over 26 an ounce, which we said on your show many times last year was problematic, was very bullish this year. So that's one positive takeaway. The second positive takeaway is what you mentioned, that $30 silver was major resistance for 11 years up until recently, right? So, like, that's huge. I wish we would have held 30 for a bit longer. I mean, now that we've broken down below 30 again, it's frustrating. Do I see us getting to that 25 to 26 level again that was problematic for so many months? If we do, I'll tell you, I'll be a buyer. I've bought silver twice this year at 24 on the nose and 25.01 an ounce. We're going to buy again in that range of 24 to 26 if we get the opportunity. I just don't see it happening given all of the things that are happening globally since we last talked. I mean, there's just so many things. The North Korea news, Russia adopting Chinese currency. Like, there's so many things that can support precious metals here. I just don't see it happening. But I will say that the silver stocks really responded to the move of silver, and they have pulled back since. So now, if you're a newer investor to the sector, just take a look at a 3 or 6 month chart of some of these silver juniors. I mean, they really moved a lot and they pulled back a lot. So that gives you an idea of how volatile this can be. But it also gives you a sense for the upside, right? We talked about Guanajuato silver on your show last time. I think 2 times ago it was trading at 13 cents, which was a ridiculous price. I think I used that word, or insane or something, which I rarely will say. But, with a company that is producing 1 million ounces of silver per quarter, and then, 4 producing mines with 3 mills. I mean, they have a real company here, for that to go from, 35 cents, I think, to 13 was kind of nuts. And now it's trading at 18, but it had run to like 23, 24. So it has consolidated a bit. Will we get back to that 13 range? I don't think so. And so I've got 2 orders out there, Charlotte, for stocks like this. One is at that 13 to 14 level, see if I can get filled. Secondly, I'll have another order at 17 or 18 right below the bid if I'm interested in buying something silver related that day, so that at least I get some shares. And we've bought that stock, I don't know, 6 or 7 times now over the course of 6 months. So we leg into things. We don't build huge positions all at once. I think that's really flawed. And we've said that, many times before, but just to reiterate. Looking at other names in silver right now, I mean, the silver large cap stuff, you could look at ETFs like SIL, SILJ is the junior. Either of those would work for general exposure. They kind of are similar to GDX and GDXJ on the gold side.
Okay, thank you for going through what's going on in silver as well. And I think it is always good to get that reminder on how you can go into these stocks, not all at once, but gradually. So let's now go back to the special situations that you were talking about. So I always find that you are looking at some really interesting plays. So let's see what you have on the go there right now.
Sure. So where do I start? I think we talked about gold and metal once or twice. That's GMTLF. It has no Canadian ticker. It's in London as well. And the ticker there is GMET.L. But if you look at GMET.L today, it did over 1 million shares, which is the biggest volume I've seen in quite some time, on the back of very positive news that they might be onto a new porphyry discovery in Nevada, which is great jurisdiction. Oliver's a young CEO, but he's sharp. He's aggressive. He isn't aggressive in terms of just taking money hand over fist, though, which I love. If you look at the news items, he's taken, $1 million here, $750K there. He's not blowing up the share structure. Just to reiterate again how important that is, right? Because we mentioned this stock on your show at 16 cents a few months ago. It's trading at 32 now, so it's doubled, but it's got further to go. Why? I think that a stock like that is not only looking for, copper, et cetera, but it's also an explorer for tungsten, which is a critical mineral on the U.S. list. That is something that's unique, right? 91% of tungsten last year was produced in China. So we produced none here in the U.S., 0. Like, at some point, the DOD and DOE is going to say, okay, we're going to throw you a grant here, because they have to. I mean, it's obvious to me that this is going to happen. It's just a matter of when. I don't care as an investor if it's this year or next year. They have to get their act together at the government level, and they know this. So, Fireweed was another one that we've mentioned on other shows. But Fireweed is a much bigger stock in terms of capitalization. So we like the small and micro cap stuff, which has the tendency to move better on good news. Another one that fits that bill, we've talked about before in your show, is First Tellurium, FSTTF in the States, FTEL in Canada. They had great news since we last talked. They brought in $29 million US from a company called Resolve, which I had never really heard of before, but in doing due diligence, they, do business with Apple, Tiffany, a bunch of large cap names. So I think there's been some misunderstanding by the market that, this deal might not get paid. We see that sometimes, right, where a deal gets announced and then it doesn't really materialize over time. Clearly, this company, Resolve, has the ability to pay First Tellurium for whatever, deal that they can strike down the road as well. So when you have a small company getting funded by a much larger company with deep pockets, that's a huge positive, I think. I mean, I think it's just, as I've said on a show just recently, I think it's a matter of time before analysts start realizing that this stock has a lot of potential as not only a mining stock, but as a tech stock, because Tellurium is also, one of those minerals that China dominates in terms of production. And lastly, we don't mention oil and gas too much in your show, but I spent a lot of years in oil and gas and MLPs. And I just talked to a new CEO for us, which is Delane Weeks over at Angkor Resources. And that ticker is AMK in Canada, AMKOF in the States. They just came out with really good news today saying that they were shedding one of their non-core assets for 600 grand US. Not a huge amount of money, but it's allowing them to pivot now and focus on drilling their gold and copper targets. So it's an unusual situation in that they have gold and copper exploration in one bucket. They've got oil and gas production in another bucket. And then they have a third bucket for carbon credits. So there's a lot of ways for investors to win. The chart looks really good. It's made a series of higher lows for the last few months. But it does trade somewhat thinly. And that's one of the reasons that, we look at stuff like this, Charlotte, because it's not going to take much to move a stock that trades that thinly with a large bid ask. It's pretty attractive. There's a good press release they put out, I think it was late May, early June, just talking about their oil production going up, for the last 5 months in a row. So, again, I think oil is going to do better for the next 1 to 2 years than it is now. And we like little microcap companies that are well run like this.
Okay, definitely some really interesting companies there for everyone to look into if they would like to. And before we turned the camera on, we also said we would look into uranium and royalty companies. So interested to hear about that. I know uranium is very popular with our audience, but I haven't been able to have as many conversations around that lately. So interested to hear what you have to say.
Sure. We've talked about Forum multiple times on your show, and that's why I like to revisit certain names to let people know that we're still tracking it or owning it. We still, own this stock. It's FDCFF in the States. They put out news today that said that they basically are moving into the drill season, which is great. That's what people have been looking for from them. They're doing this on time and on budget. So I love to see that. I think Dr. Hunter does a really good job in the field of being, grounded about expectations. But I will say, if you look at their news last fall, they literally drilled 1/10 of the amount of drilling they're going to be doing now because they didn't have a lot of cash, and they still made a new discovery in the Thelon Basin. So that's where they're spending their efforts right now predominantly, is in the Thelon this summer. And I would expect they're going to come out with a lot of news, I'd say probably early August into Beaver Creek, September 10th, good timing as people, want to get to, the major mining conferences in September. We say that to set up, another stock that we've been starting to look at more closely, which is F3 Uranium, which is FUUFF in the States, and I believe it's FUU in Canada. They have put out just consistent news all year, and we look for that from companies in sectors that, let's face it, uranium was not on many people's radar 3 years ago. This is a commodity that caught a lot of fire last year. As it had a great, January this year where spot ran to 109. But I always try to tell investors, companies can only do so much, right? If there's no news, to just put out news for the sake of news is not really helpful, but also abandoning shareholders and not putting out news for 3 months at a time is not a great strategy either. So I think F3 kind of strikes a nice balance there of just putting out, stuff on their project that investors can get behind at this price. Stock hit 41 cents here not too long ago, and it's trading at 24.5 right now. So, we've seen a lot of these uranium juniors, Charlotte, pull back sharply from where they were in January or February.
Well, and on the note of uranium, so just this week we had the Paladin Fission acquisition announced, and I wonder if for you, does that signal more M&A coming? What are your thoughts there?
I can't really say. I do think that it would make sense for many subsectors of commodities to look at this, whether it's uranium, gold, silver, whatever, because putting together two companies to be a larger target for a takeover or just go into production, whatever their goals may be, makes sense a lot of times. But it also can be not so great, in terms of upside for the investor. You have to really assess that, marriage of two companies and say to yourself, is this what I bought the stock for in the first place, right? Like, was a merger of equals? A lot of people would answer no to that. So I think CEOs need to be mindful of this before they go and do what they're going to do, because look, I mean, their salaries are paid by shareholders like us. And if they're not on board with that, which I don't know everyone is, people vote with their dollars, right? I mean, it's just the way it is. And so I always encourage people to do the right thing by shareholders. I think that's what you need to be doing as a CEO to garner more interest in what your stock is all about.
I think that's very important. And one other topic that I want to make sure not to forget is you mentioned that you have an event coming up in November, and you're just telling me about this before we turn the camera on. So I'm excited to hear more about it. Could you tell me what it's all about?
Yeah, it's actually going to be in October. It's October 20th through the 22nd, and it's going to be in Fort Lauderdale, Florida at the Four Seasons. Would love to have some of your listeners come out to that to join us. We don't have the registration documents out just yet. That'll probably take a week or two, but you can fill out that registration doc and we'll take a hard look at, having you there. We are going to limit this to 35 companies because I find a lot of these conferences are getting really, really crowded, and the CEOs can't have a meaningful impact when there's 100 plus companies there sometimes, right? So we are also not going to limit this to just gold and silver companies. We'll have all commodities represented. So we'll have, a few royalty companies, we'll have a few copper companies, we'll have a few lithium companies. We want to distribute this, evenly amongst the subsectors of commodities so there's something of interest for everyone. And my goal, hopefully we'll achieve this, is to really have more of an interactive conference where the CEOs walk away feeling they met a good amount of new high net worth retail in the U.S. and investors walk away feeling they got really, solid updates from the companies. So we'll have a format that's kind of a hybrid format, Charlotte, where it's part one-on-one meetings a la Beaver Creek and then part presentations like you would have at most conferences.
Okay, really exciting. And I'm so sorry for getting the month wrong. I'll leave the information in the video description and I will get it right when it's written there. Thank you for going over that. And before I let you go, I just want to check in. Is there any final thoughts you would leave investors with, anything that we missed today?
Sure. We've talked on this before, but I'll just say it again. I find that this sector is probably the most difficult sector to look at on the equity side, period, end of story. And if you're trying to do this by yourself, you're going to get in trouble somehow, some way. It's really important for you to reach out to a professional like myself or someone else in the sector that can help you with going through the tea leaves here. And I think investors are starting to see that more clearly now, right? I mean, if you look at having a conversation about uranium in January, I could tell you from 100 to 109 spot, there were so many investors saying, hey, we're going to take out that all-time high of 140 plus, and we didn't even come close to that, right? And so now you're looking at your holdings and saying, what did I do to myself here potentially, right? Because not all stocks are created equal. You have to know, what is that cash balance? What's their debt balance? What is their prognosis over the next 6 to 12 months? You got to look at so many factors in this sector to be successful. So, take a look at our website, fennecconsulting.com. We've got a newsletter as kind of a starting point, which comes out a couple times a month. We have, real-time email updates, which I think are extremely helpful. We talked about that China situation that you brought up, Charlotte, literally 1 minute after the news, saying this was going to put pressure on gold and silver on June 7th. We were absolutely right. And people find that valuable, right, to get that information in their inbox when it happens, as opposed to getting it a week later through a newsletter, whether it's mine or someone else's.
Okay, really good. And you're so right. It is good to have the information right away versus, later where we can talk about it, but it's later. So thank you so much. Really good to talk with you. And I'm sure we'll be checking in again soon.
Great. Thanks, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is John Feneck with Feneck Consulting. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.